These international energy companies have global portfolios. And when they evaluate opportunities around the world, they look at all kinds of operating conditions and fiscal and legal conditions. But the first thing that they have to ask is their operation, are their people going to be safe and secure? Reasonably so. And in Venezuela, I think we have a lot more questions than answers at this hour, and as we start the new week. And so the political outline that you and the colleagues have described here still has some uncertainty if we're going to be working with the previous regime and previous government, just sans Maduro, cannot provide the requisite political stability that international investors and corporate strategists want to see before taking big commitments to enter a market. Now, just for the exercise, if we assume hypothetically that we have that requisite political stability, and probably the next thing on the list, as I mentioned, is fiscal terms, how are the companies and the government going to share revenues through taxes, through royalties, through production sharing agreements, et cetera, then we can talk about the potential for Venezuela to increase output. And I think there's basically two stages to think about. There's kind of the first phase, which is sort of low-hanging fruit to amplify Venezuela's oil output, and then there's the longer-term stuff. I think that the low-hanging fruit could probably bring another 500,000 barrels per day to the market from Venezuela. And remember, we're starting at a baseline, recently at least, of around 1 million barrels per day, a little bit less. So I think that in the short term, it could increase by close to 50%. And by short term, I mean somewhere between 1 and 2 years.